we're going to pay for that someday because in the end, it's about value. They expect performance. And if you BS them, when you sell the company is when it comes through because the next person who buys the company is going to figure it out. So you really, the bottom line is you really have to perform. Now I want to look at it from the other side, the venture capitalist side, and this is why they do it. Let's say a VC, and they do lots of things. They raise money from what are called limited partners, and they're raising lots of money from different places. But let's say, and they don't invest in 10 deals like that. They have to evaluate them. But let's just assume they put $1 million in each of 10 companies. And what are the results? Well, the first couple are dead. They get nothing out of them, literally, just gone. You know, and it's not secured by personal assets. There's just nothing there. A couple of companies turn into what the industry parlance is they're zombies. You really can't kill them, but they're never going to be human again. They sort of continue. They might have some value, and maybe you'll find somebody who's willing to buy them. In fact, getting $1.6 million for one of those would be pretty good, actually. But they look for companies. They use baseball parlance, maybe better than the zombie parlance. It always works around Halloween. My company was a solid single, maybe a double for the investors when we sold. They're looking for that company that they cash in $20 million. And they get $38 million, and that's actually a compound annual growth rate of like 21%. That's less than they actually promised to their investors. They didn't promise, because if not, just put your money in Fidelity mutual funds. So they have to get those kind of numbers. So there's two sides of the venture thing, and that's why they're as tough as they are. So now I ask the question: how many now think it's a good idea to use venture capital for your company? That's about the same. And how many think it's a bad idea? I can't tell if it was the same people, but sometimes I see people do this with that. So when you present to these VCs, let's say you've decided you want venture capital money, and what do they care about? Well, do they want the product details? They want the financials? They want to know your market size? Yeah, they do, but it's not really what it is. It's really, and this is why I coined this phrase, it's really about the story. They are looking for something that's compelling. All those other things they get other times. They're going to go through a process. They choose you. They're going to do a process called due diligence, which is a very, very detailed exam and not fun. And that's going to happen. But they want you to be compelling. So what I would say that you need to think about that kind of a presentation. And there's maybe a lot of other presentations that you might do of this type that have to be almost like a TV show. Gene, Shark, you've both been through it. You make these presentations a little more like a TV show, right? You've got to be compelling. So what do they care about? Generally, we've looked at it at Jumpstart in 3 ways. It's the product. What's your secret sauce? What's different about you than anybody else? What can you do that's better than anyone else? It's, do you have a really, really big market? And then we care about the team. In fact, one of the analogies that's often used is the horse, the jockey, and the race. So the horse, obviously, is your product. And that's analogous to the horse. And the jockey is the one who's riding the horse. But you got to be in a race that matters, right? If you're in a crappy race, that's like being in a crappy market if you're in a good race. There's a lot of VCs who say it really is about the jockey, that it's all the team. And I think the team really matters. I mean, when venture investments fail, they most often fail because of the team. They have troubles of different types. That said, and in fact, I'm on a mentoring program, and they were just talking about a couple of the entrepreneurs. They just can't they can't work together, and they were good friends, and all of a sudden they're fighting and they can't get along, and the company's going to go belly up. So the management matters, but I still believe a lot of this matters, because if you give me a great jockey, and we put him on a slow horse, you know what I'll show you? Slow horse. So you gotta have the goods. So in terms of the product, what the goods are, that secret sauce. What do you do that uniquely solves a customer problem? Do you have a business model that makes sense? I mean, actually, every once in a while you get companies. Facebook and Twitter got away with no business model that makes sense for years. Facebook, I mean, since they first went down after their IPO, they've come back pretty strongly. People still don't know how Facebook is going to make a lot of money, and even less people know how Twitter is going to make a lot of money, but I think their IPO is going to do great. They don't have a great business model, and trust me, you can't usually pull that off. They did, but you can't pull that off. You got to say, how are you actually going to make money? Can you tell about your technology in really simple but really understandable way? Are the economics compelling? Can you say to a person who's in a factory, if you implement my product, you'll get return on investment in 12 months and you'll be making money, and I'll show you in 5 years how much this is going to save you? That's compelling. And do you have IP? Most people, with the exception of everything but software, they care about intellectual property and how you protect it. In terms of the market, they want to see big markets, big opportunities. Generally, the rule of thumb, I don't always agree with it, but it's what most people use. is, can you show me $1 billion market?